Welcome to FOMO Consulting for your daily AMC stock analysis video on Friday, July 2nd. Ladies and gentlemen, I believe we could be looking at a very large fireworks show next week, and I'll show you why. And as always, the apes are winning, diamond hands are winning, most importantly, the retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel, and I appreciate the support. Let's get into the video. Thank you as always to each and every one of you who has liked, shared, commented, and subscribed. It means the world to me. Thank you very much. So let's start with a quote. Yesterday is not ours to recover, but tomorrow is ours to win or lose. Lyndon B. Johnson. Certainly the last few days, this past week has not been as anticipated. Certainly not what we all want, but there is no doubt that we are winning this battle each and every day. And I believe that next week is ours to win. So let's look at the broader market here. Overall, pretty nice day for the broader market. S&P up 32 points, Dow up 152, NASDAQ up 116. The Russell was down 23, but overall, big tech, a lot of the blue chips had fantastic days. Good way to close the week. Certainly got a big pump from the private payroll, increased by 692,000 in June, beating expectations. So it's very good to hear people are going back to work, finding jobs to go back to work, and overall that helps the broader economy, including AMC. So let's look at crypto. Overall, crypto had a decent day. Overall mixed. Doge was up, Bitcoin slightly down, at least at the time of this recording. Ethereum up slightly, Litecoin down, what have you. Overall, I'm hoping with a 3-day weekend that it will have a nice green recovery weekend. I'm sure you are too, if you're certainly invested in. Well done, German apes. As always, again, closed the week out very nicely, very strong. Had a very nice recovery at the last part of the trading day, no different than us. Closed at 43.34 euros, down 5.04%. No big deal. Again, I believe you will have a nice green week next week as well. So let's look at AMC. So overall, the day, again, did not go as planned, but from the very opening bell, our opponent borrowed 4 million short shares. Now, if you look at the Russell chart, Russell 2000 chart directly below, we mirrored that almost to a T. So there was already weakness in the market. They exploited it and certainly drove the price down to $47.77, where we bounced very hard. We recovered fairly raggedly, consolidated throughout the middle part of the day. Then we began to recover, certainly, and we had the beautiful closing, nice green candles, a lot of buying pressure. So overall, again, I think we had a fantastic day, all things considered. We closed at $51.96, down $2.26, down 4.14%, up slightly after hours, no big deal. Again, as you can see, the chart overall mirrored the Russell 2000. Strangely enough, even on a lighter volume day, we were number 5, at least on Webull, regarding volume. And as always, we are the most popular. So what I want to show you here is IWM ETF with most AMC exposure in it. As you can see, sold off right from the opening bell, shorted down, whatever. It kind of flattened out, obviously consolidated, and then had a somewhat of recovery second half of the trading day. Side by side with AMC, you can certainly see the resemblance. Sold off, ragged consolidation, whatever you want to call it. Recovery, and then we certainly had the big buy up at the last 20 minutes or so of the trading day. So overall, we mirrored IWM about as well as we did the Russell. So what you're looking at here is the 1-minute daily chart for May 28th, which was the Friday before Memorial Weekend in the United States. Obviously, we were closed for trading on that following Monday. We all know what happened the week after. But if you look, they did the exact same thing on that Friday. They wanted you to see red all weekend. They shorted it very, very heavily. As you can see, we started from the opening bell at $36, and they shorted it all the way down to 24. Did have a recovery, but overall traded flat. They had every intention to scare you out of your shares. It is psychological warfare, as we have discussed. They want you to look at a red chart all weekend long, especially on a 3-day weekend, because again, they want to scare you out of your shares because why? They need them. So let's look at a different perspective of this. So this is the 10-minute chart, excuse me, for the same time period, May 28th. As you can see, shorted it very heavily. We had a big run up after hours and pre-market from the day before, and they shorted it down very heavily again from the $36 level down to the $24 level, flattened out for the rest of the trading day. But the following Tuesday, we know how that went, right? We actually recovered. We did quite well. We had a 22% green day on that following Tuesday, and quite frankly, I expect a similar performance. So let's talk about what a breakout is. Obviously, breakouts are with relatively high volume show conviction and interest, and therefore the price is more likely to continue moving in the breakout direction. Breakouts on low relative volume are more prone to failure, so the price is less likely to trend in the breakout direction. And an example on the right. So this is yet another diagram here, two clear examples of false breakouts. We've all seen what the false breakout looks like on the left. We've tried to break through that $60 level. Certainly when we were in the 70s, we wicked up very, very hard and were shot down very, very fast. Alternatively, on the right side of the chart, it happens in a bearish direction as well, and that resembles exactly what occurred today with the heavy shorting, where we wicked down to $47 and change. So overall, you can pause and read this, but you know, we experienced what I would consider a false bearish breakout. We are still in the wedge on the daily, and I'll show you right here. So again, we've been in this consolidation period. Yes, they tried to press us below that. Yes, we do have a few concerns going into next week. We need to be green. We need to have a recovery, but again, the $51.50 level, that area is absolutely essential to hold and regain, of which we did. So as you can see on the 5-minute chart, we traded above there, obviously, for the better part of the trading week. This is the past 5 days, including today. We hovered above that line. They have it every intention again to borrow those 4 million shares and short us down. They actually borrowed 4 million shares before we traded 10 million in volume at the opening bell. So it was a really, really strong day from a shorting perspective. They did end up going so far that put us on SSR, not only for the close of trading today, but they are on SSR for Tuesday as well. So that is good news for us. They can short it on the uptick, but not down. So that's good news. So again, they pressed us down out of the wedge, at least on that 1-hour chart, but we've circled back around. We are trying to regain that level again. Holding 50, 51 and recovering above that is absolutely huge. Again, volumes today were low. We're going into a holiday. They certainly took advantage of it from a shorting perspective. But again, we do have a few concerns. If we break down below 50 and hold it in the upper 40s, you know, we're going to have some work to do, right? But now that we've regained 50 and now 51 and above 51.50, which is really a hard sport for us, I think we're going to be fine. Personally, going into Tuesday's trading, as you can see, the RSI got completely oversold. We did recover, but we have an awful lot of room to run on the hourly. And as you can see, the MACD responded to that as well, being shorted down very, very hard. So let's look again at the daily. Alligator's just chilling, mouth still open, but we've got some work to do. We need a couple green days to get him eating again. RSI is back close to neutral. MACD is certainly pressed down. I believe we'll have with a few more green days next week, we can certainly get that heading back in a bullish direction. But this chart breaking down the way it did today, again, there's some danger. There's always risk and danger, right? But holding that $50 level is absolutely key. We break down below it and hold. We might hit 47 again quite quickly if we hold above it on Tuesday and recover nicely and have a good bullish green day. I think that's out of the equation for the short term. But again, I think Tuesday, Wednesday are absolutely going to be essential. Obviously, everybody knows about the threshold list. We'll see what the ramifications of that is in the near future. So I feel very, very bullish going into next week. I believe we could have a very green week, 3 days off, and a lot of time to get hyped up about AMC stock. So GME, again, speaking of hype, GME needs a good catalyst. It had a good day, good solid day, as you can see. They took this the same shorting attack first thing in the morning, certainly probably tied to IWM, as I showed you earlier. Pretty well consolidated for the better part of the first part of the day. Had a bit brief of recovery, sold off just a little bit, but closed very, very strong. Again, GME is holding very, very strong above that $200 level, and I believe, again, short term, it will recover and it will continue its bullish run very, very soon. So this was an interesting article. AMC options traders aren't discouraged, repeatedly hammer calls. So obviously there's a lot of bullish sentiment around this article. Yet another coordinated attack. AMC shares fall after Iceberg Research, whoever they are, discloses short position. Good. Who cares? F9. Go see a movie this weekend. Certainly support your company. F9 is absolutely rocking it, not only domestically at 88 million, this is through yesterday, but certainly worldwide 423 million. And this is going to be a huge weekend, I think, for the movie industry. Baby Boss is coming out, so Universal to come in first, second, and third with F9. The Boss Baby and Family Business and the Forever Purge. So a lot of positive sentiment, a lot of positive media, I think, will be surrounding the movie business over this 3-day holiday weekend. I think it will drum up a ton of new revenue with all of these openings. Next week, Black Widow comes out, and then a couple of weeks from now, Space Jam. So anyway, a lot of good things coming out fundamentally for this business to keep us in the news, to keep the industry in the news. So again, I think we could have a very, very bullish week next week. Let's look at the overall short interest data. 432 institutional owners still, 392 long. We have a lot of whale support on our side. Shares on loan 95.54, cost to borrow 2.05. Utilization still around 86%. Short interest right around 18%. And as I showed you, they borrowed 4.29 million shares today, returned 6.16. Again, 2-day delay on that. But overall, they came out both guns blazing, tried to shove us down, scare us out of our position. Certainly a lot of psychology to force a red day going into a long holiday weekend. No doubt, I believe that AMC will be a big, big topic in social media platforms over the next 3 days. So again, this is the own loan average of short positions. It has gone up a little bit. We are close to 36 days, as you can see by the trend data, and the short interest data is pretty well holding flat, as we just discussed. No big changes, but they are certainly not getting out of their positions. Options today, obviously, not a whole lot to fight for, quite frankly, in this level. But you can certainly see why they tried to shove this price down to the $50, $49 level. There's a lot of put open interest, at least for puts are concerned, around 12, 13,000 at the $50 level, and at 49 there was about 6,000. We obviously closed above 51. overall, I think is around 27,000 contracts total for calls expired in the money. So a pretty light week overall regarding options. Again, the sentiment, there was a lot of volume today, almost 1.2 million in volume, which is pretty good as opposed to where it's been more recently, 1.3 to 1. Call versus put ratio certainly still very bullish. But as you can see, a lot of contracts pretty well spread out going into next week, and certainly for July 16th seems to be gathering a lot of steam in that regard, calls and puts alike. Nothing too terribly fundamentally changed about this. Always fun to look at. Let's close with a quote. We didn't lose the game. We just ran out of time. Vince Lombardi, Hall of Fame and legend. So, again, we fought very, very hard. We had one heck of a close. Very, very bullish going into the holiday weekend. Recovered very, very nicely. Obviously, there was a lot of psychological gamesmanship today, shorting it very heavily, trying to keep it red. They've done it before. They've done it again. But again, I believe the positive sentiment around this stock, me personally, certainly not financial advice. I'm not a financial advisor. But I believe on Tuesday and Wednesday, we will have phenomenal days. I believe 3 days to garner a bunch of attention, discuss with family, friends over a beautiful holiday weekend will certainly do us very, very well. So as always, I want to thank you all for watching. If you found this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. I would appreciate the support. I hope you all have a fantastic holiday weekend, and I hope your life is full of green candles. Take care.